Welcome to the REI Hacker Podcast, where we unlock the secrets of real estate success. Join us as we dive into the journeys of top investors, mentors, and industry experts. And now, let's hand it off to our host, Benson Juarez.
Welcome, everybody. Thank you so much for being here on this edition of the REI Hacker Podcast. Really excited for my next guest. Matt Rosen is with us. He is the CEO of the American Lending Conference, where he brings together leaders from the private lending industry for networking, education, and collaboration. With over 17 years of experience in the private lending space, he's built a career around connecting professionals and driving meaningful conversations. Matt, thank you so much for being here. I really appreciate it.
Thank you, Benson. I appreciate it. I'm honored. Thank you for having me on your show.
No problem. You and I met about 6 years ago, and my business partner and I attended the Pitbull conference in Scottsdale. I mean, we met probably a little bit before that, and you said, come down, check out the conference. It was about the time that Privy was really starting to look at, lenders as potential customers. And so it was a great place to come and network. And one of the things that I noticed about the way that you ran that conference was that it was more about, finding business partners than it was just about just general networking. Because networking is, let's just be honest, people just don't really do it right. It's just kind of a way for people to hang out and feel like they're doing something productive. But you've really built some good mechanisms in the way that you run a conference that's really about doing business together and not just a passing event.
Sure. Absolutely. Yeah. Thank you for acknowledging that. I appreciate that. What I learned over the years was that in order to make a successful conference business grow, the only way to make that happen really is to find a need and fill it and to serve others. And when you really boil it down, it comes down to what are people looking for at our conference? They're looking for either more capital or more deal flow, or maybe they're kind of a newer player in the market, or they're looking for more educational resources to grow their business. So one of those three buckets, if one of those is checked off, then that's a success for our attendee and our sponsor for sure.
Yeah. What I really liked it too is that you took it way beyond the conference. Even after that, you were asking like, Benson, who can I introduce you to? Mm-hmm. Right. And you were asking, what's your goal? And you were already thinking behind the scenes, like, who should I connect Benson with to help this conference be meaningful, even above and beyond like just being present at the conference, which I loved.
Right. Yeah. I mean, I think if there is a skill set or anything that I have that I utilize that's a strength of mine, and I don't know what it's called, but I think I'm a connector. I'm good at that part of the business and I enjoy it. I could do that for free all day long. That's something that I'm passionate about. And so it only works. It's kind of a hand in glove perfect situation where, I know people are looking for certain types of industry leaders at our conference. And if I know them, I would love to pull on those resources and help others connect each other. And at the end of the day, everybody can do good business with people that they know and like and trust. And
yeah.
That kind of thing. So yeah, it's a big thing that I love to do. And I not just do it at the conference, but I'm more than happy to work with people pre-conference and post-conference. So email campaigns and, social media posts, personal introductions, whatever I can do, because I know in the long term, you're going to end up, it's going to end up growing the community together. And we're just adding the more value we can push forward within our community, the better off everybody is. And I just know that our growth will happen on a long-term organic basis through all that kind of connection stuff that we do.
Yeah. So your father is Leonard Rosen.
Yep.
A pioneer in the industry. And you said that the conference that I was at was Pitbull number 50.
I think it was. Yeah. I think
really
it was
developed that whole model over the years.
Huh?
And now, you've launched the American Lending Conference, which is your own baby, to continue your father's legacy. What are your biggest aspirations for the event, and where do you see it growing beyond just getting bigger?
Yeah, definitely. That's a big question. It's a great question. Well, I'll tell you kind of let me back up a bit here on the motivation on why I started the company, and it will give you a little bit of context on where we're going. So and you mentioned it, for 16 years, and now it's actually 17 years, I've been in the industry helping people in regards to our conference and introducing people and everything we just talked about. It's been a passion of mine as well. But what I noticed throughout the years, through the 16 years, and of course, when I first started, it was all about just getting people in the door. That was really all I was just a glorified sales guy for so many years. But I had found out that the only way for us to succeed is to really go above and beyond and to connect those people together. And that's how we're going to grow and develop this cohesiveness. But anyway, what I found out throughout the years was you would end up seeing some of these bigger guys in the industry only get bigger and stronger, which is great. That's what you want to do. A big company wants to grow and scale up, and have great earnings and everything like that. But what I saw was the smaller players, the newer small to medium sized companies were being pushed out from the bigger players. And I starting to kind of see this, like, in a sense, this good old boy network, if you will, where it's the same big players getting bigger. And then we don't see the smaller, the small mom and pops coming in and they're all excited. And all of a sudden we don't see them anymore. Why is that? These are people that they're filled with talent and abilities. They have the resources. Why is that? And so I started figuring this out. And then it started becoming a thing where people are starting to say, like, hey, we're starting to notice this kind of old boy, good old boy network. And it wasn't even my words. These are what people were telling me after so many years. And so that was one of the reasons I started American Landing Conference. I wanted to change that culture where that good old boy network wasn't really a thing as much anymore. I wanted to help the small, medium-sized companies grow and scale, and they can be the big players and serve people better than what I saw. And so so basically it comes down to practical education that I wanted to provide, because what you find is some of these bigger conferences, you'll have a bunch of the big players, and I love these guys, by the way. Like I've developed great relationships with them, but they get up on stage and it's a lot of opinions that they start, talking about their theories about the economy and their theories about interest rates and what the Fed is going to do and everything else. And what about the practical real-time education for somebody that they can use, apply it to their business and make money with? And that's really what I wanted to do on the educational side. On the networking side, I wanted to bring light to everybody in the conference, not just the guys that are paying the most or the big players. I wanted, Joe and Jane, who are brand new, have no clue what they're doing. I wanted to see their success. And so that's really the foundation of the motivation. One of the motivations that we started American Landing Conference is serving those people and giving them a voice, as well as providing education that they can use. That's very practical.
Yeah. The interesting thing is there's only so much borrowing capacity out there, right? So on some level, there's competition.
Mm-hmm.
Did you have any pushback from the big guys who are like, listen, there's a good old boy network for a reason, right? Because we can keep more of that business for us.
Sure. Huh?
And so were they like, well, why you're creating that place where you're creating more competition for us? We're going to lose business by participating in the system where you're trying to level the playing field. Did you have anything like that?
Yeah, I did have some pushback. So quick history is my father sold Pitbull Conference and the NPLA to Mr. John Hornick a couple of years ago. And a gentleman who I admire and I respect, and I think he's doing a great job. I always liked John, but I stayed on with John for about 6 months, and things were great and everything. Nothing really against what they're doing, as so much as it is I've had this kind of thought in my mind and this dream to start American Landing Conference. And I just felt that it was the right time. Unfortunately, they didn't see that as a way to collaborate with me. It was more of a probably, hey, this isn't right. You're now a competitor of mine. This is crazy, blah, blah, blah. And there was some pushback on that. I certainly hope that now we're able to kind of collaborate and work together with them. And I think what they're doing is great. I really do. Our conference is much different. People told me it is much different. There's brand new people every time at this conference. There's newer folks that we're marketing to. So you're going to see a lot of new brokers, new investors, new, capital providers at our event. But my mindset is really like, hey, if there's a way we can work together and come together in unity and build the industry together, I think we all win. And so that's a little bit more mindset. Gerasi was at our last conference, a few of the representatives from Gerasi. So it was really great to see them at our event, knowing that they put on national private lending conferences as well. And they love the event, and we'll start working together a little bit. So those are all great things.
I like that philosophy. Like there's enough to go around. There's enough for everybody to eat.
Yep.
And, in your 17 years, you've seen the industry evolve and change, I'm sure, in many, many different ways. What are some of the biggest changes you've seen, and what do you think is coming down the pipe?
As far as the industry?
as far as the industry changing. Yeah.
Yeah, yeah. Ground up construction was something that we've been discussing a lot in the last, well, since I started the conference, the American Land Conference. So ground up construction is something that's very hot. However, there's a lot of speculation going on right now with the trade wars and tariffs that are happening, and how is that going to affect the price of goods when it comes to ground up construction, and how's that going to relate to things. But that's still a hot topic. The long-term DSCR loans are very popular right now. Is the bridge loans and everything else, they're pretty strong. What the sentiment that I got from our last conference, and these are people that were at the NPLA conference, they're at our event, they're at a bunch of other conferences out there, and they said one common theme that we got from all these events was that everybody's very bullish about the private lending industry right now, and they're going for it, and they're excited. There's always going to be different kinds of speculations, but people are doing business right now. It's a good time. Interest rates are still not ideal. That's never going to be ideal. No one's going to be happy about the interest rates, but it's what you do with the market conditions that will make or break your business. There's always going to be ups and there's going to be downs. It's what is your strategy in relation to that? That's what's going to make you successful, not, hey, the market is doing good, so I'm going to do good, or the market's bad, and so therefore my business is going to flow with the market. That's just not how you should run your business.
Yeah. For a long time, the private money lending industry was just about who you knew, right? And there was always some level of underwriting on the property, but it was more of like a handshake kind of business where you did business with people that you knew and trusted. And as you get larger, those one-to-one relationships become fewer.
Right.
It becomes more about, underwriting the person and the deal. So what have you seen change in that process of how a lender decides that they're going to write a check to somebody with data and technology, and even with the entrance of AI? How do you see that changing?
I haven't seen a big change actually on our end as far as the way people underwrite a deal. It's more like they're getting ready to start using the technology a little bit more, but and then that would then help them in their underwriting guidelines. And I've heard of stories where lenders can seamlessly underwrite hundreds of deals within seconds using AI, and it's like a green light or a red light approach. People talk about that, but I don't really see it happening. It's still a very much of a handshake business, and you got to connect with somebody eye to eye, and they need to know you, like you, and trust you. And then, okay, by the way, let's take a look at your deal. So I think that's still in play. I think AI is going to be such a game changer. It's just we haven't really seen, or technology, we haven't really seen the effects of it as much right now.
Yeah.
Just from my perspective, I mean, again, I'm from the conference world. I mean, I do deals out here in Hawaii, but I mean, not at the scale of some of these larger, not even close, these larger companies that we work with. So,
yeah. But you can certainly identify trends, and there's a buzz that happens around these conferences that people are talking about things.
Mm-hmm.
Right. So what are some of the things that you hear people talking about? Maybe industry changes, new players in the space, maybe some opportunities or some threats in the industry.
One opportunity I see is AI. In fact, we had Shay Wally, who's the CEO of Baseline. He gave a great speech on the role of AI in private lending. So we're starting to see that. Now, for most people know that a lot of the private lenders in our industry, especially the old school, guys who still consider themselves hard money, they're a little bit behind as far as technology goes. So they're still shaking hands, and doing business the old school way. But AI is definitely a trend that's going to revolutionize our industry. So we're just trying to brace ourselves a little bit and see where that's going to take us. There's threats as far as what that's going to, as far as security reasons and security issues with AI. And I heard someone talk about the security issues with ChatGPT, running deals through ChatGPT. And I'm not smart enough to know anything on technology to tell you why these are all an issue, but people are talking about that. It can be a threat. So we have to be mindful about that. Again, ground up construction seems to be a hot topic right now still. Bridge loans and, all that kind of stuff. Looks like fix and flip investors are still very strong in our market. And so I really don't see that. I don't see those guys going away anytime soon. So you're starting to see more of those guys become more active. Like here in Hawaii, I remember years ago, there was 2 or 3 maybe full-time real estate investors that are doing your fix and flip rehabs. Now, gosh, there's countless. They have a lot of smaller little events out here with a bunch of investors very active in the communities. I know locally, and that's just what I'm hearing from other submarkets as well. And when we're in Nevada, I heard an investor tell us the same thing. It's growing, and so yeah, it's an interesting time.
You mentioned something about sort of like the old cats and
Yeah,
how, they still call themselves hard money lenders.
right.
So at what point did the industry say, okay, we're not going to be hard money anymore. We're going to be private money lenders. When did that start to shift and why?
Okay, great question. And I believe we had something to do with that. We, meaning the NPLA, when I was part of the NPLA. And it was a conversation that started with my dad and some of the key leaders in the NPLA with John Beecham and some other gentlemen discussing what is the stigma of hard money. And the stigma at the time of hard money was a little bit more on the predatory side of lending. That's what lawmakers were looking at our industry like. They're kind of pulling us in the same industry as the payday loans guys on the corner of next to the liquor store. I mean, they don't have a clue what we do, right? And that's right when also more institutional investors were jumping into our industry, realizing they can earn a very strong rate of return on their money. And so we started seeing Wall Street money coming in our industry. So one thing led to another. They decided to start to change the vocabulary from using hard money lending to private lending, right? And I remember the time. I think this was, I don't know. I know I'm butchering the dates and times, but I want to say 2020 maybe. And John Beecham made a kind of a little bit of a declaration, if you will, at the NPLA event that we're going to be starting to change the verbiage around. And I think it's great. Some guys still say it's hard money, and that's what people know it as. But I think private lending is a lot more of a professional approach.
Right. So it was more just around the narrative than anything really changing on the path.
Totally. Yeah. Yep.
Right. It's just like, okay, we're going to get all together. We're going to circle the wagons, right? We want to put out a better PR around the industry, because there was this talk of predatory lending, because you have, rates can vary, anywhere from 9 up to, 12, 13, 14%.
Absolutely.
Where rates, where the Fed rate is, right?
Plus all the fees and points and everything. Yeah.
Yeah. Points and fees to get up there. And remind me, I mean, how is this able to be regulated differently than normal loans, like consumer loans or conventional type loans that a person would get to go buy their home they're going to live in?
Yeah. So totally different loan products, right? We're not really regulated. It's a little bit in the gray area right now. I mean, many states don't require a license to broker not so hard money. Listen to me, broker the private money side of things. So you can jump in the industry, originate a loan with zero licensing, right? And so it's not regulated like a conventional loan that's backed by FHA and like those types of loans. Like you need to have your licensing down pat, and you need to have those things set in stone, and you're highly, highly regulated in those types of loans. And a lot of reasons for that is because of the knee-jerk reactions that they had from the 2008 housing crisis. And so all of a sudden, the Fed gets involved, and now those types of loans are highly regulated. And so it's a different animal. Ours, not so much. So not as much regulation in our industry. And so we need to keep that professionalism at an all-time high with what we're doing, or else we're going to start getting regulated. We're going to start seeing a lot more states, institutions, making it necessary to become licensed.
Right.
And many states, and I actually believe that everybody, if you're in private lending, I think you should get your NMLS license anyways. I really do. And my dad said the same thing for years. And I think it just adds an extra layer of professionalism with what you do.
Yeah. And there's almost kind of a level of self-policing built into these kinds of loans, because they're not government backed, right? So there's no one to bail the lender out if they're just out there giving money out to anybody. It's a lot of times it's their own money, or it's the money of their friends, or, a close knit pool of cash that they had to fundraise themselves to create.
Exactly.
So if they are just giving money out willy-nilly, then they're going to burn those bridges, because nobody wants to take a property back. Like, lenders are not in the business of taking property and owning it. they're in the business of leverage and interest and getting, that passive revenue. That's the business model.
That is the business
So
model.
a lot of the self-policing of, okay, we're going to underwrite these deals. We want to make sure we got plenty of equity, right? There's, some sort of industry standard around, 30% in, you know, equity that they want in the deal before they feel comfortable lending that money out. Is that part of the reason why it's still working?
Yeah, absolutely. And there's a misconception, and you mentioned something interesting. There's a misconception on the real estate investor side of things. Their idea is, well, if the deal has this much equity, what do you got to lose anyways? My property's up for collateral anyways, and you're going to have 30% equity in the deal, so you're not going to lose. And that's not really accurate, because there's a lot more equity you need sometimes than 30%, because if it's depending on the type of state, it's a judicial state or a non-judicial state, it's very difficult in a judicial state to go through any type of foreclosure process and get your money back in a timely manner. Yeah, the goal is not to recoup property. The goal is to make good loans to good people, where everybody ends up winning in the transaction.
Yeah,
for sure.
As much as they focus on the property itself, they're still looking at the individual. I remember for years, they wouldn't lend anybody who hadn't even done a deal yet. Like they wanted somebody who had experience, who understood how to run their numbers, how to source materials, had good contractors, and could be on time with their milestones and do draws appropriately, so they weren't just taking money out too quickly or too slowly. And I remember at one point, I heard some lenders say that, if they had a certain number of deals that were done, or if they were in a coaching program to learn how to do these processes better, that they would open more doors, because it's the chicken and the egg. Like, how does someone do their first deal if they've never done a deal, right? And if the lender requires them to have some sort of experience, right? It's that whole chicken and the egg idea. Do you remember that when it kind of started to shift?
Yep. Yep. And still lenders today are very hesitant in providing a loan to somebody that this is their first rodeo.
Yeah.
So you do have to break in. But yeah, no, it is a chicken and egg situation. My recommendation to anybody is to partner with another experienced investor on a deal. Be almost as if you're a wholesaler on that transaction. So bring the deal to the table, find it, or whatever your role is in this deal. Let's assume you have no money because you're brand new, or you don't have experience, one or the other. And that's the two main issues that lenders have. It's like, you don't know what you're doing, and by the way, you don't have any money. So let's figure this out. So that brand new person, I recommend just partnering with another experienced investor. Work with them. Maybe you bring the deal to the table. You can wholesale it to that investor, or maybe you brought the deal to the table and let's do this together. And then perhaps you can use that as a reference point as a deal that you closed on for future.
Right. And that's an interesting thing about your conference too, that I liked, is that there were investors there. Not a ton. It was mostly industry professionals.
Yeah, right.
On the service provider side and the actual lenders themselves. But you are an advocate of bringing investors in too, to create conversations. And, potentially some lenders get some business out of it too. But that's not really what it's for. It's just to kind of like everybody level up at the same rate.
Yeah, absolutely. Yeah. Now, if I can bring a group of experienced and non-experienced investors in the room, and I can also bring in the room capital providers or private lenders with money, it's a perfect scenario. Or brokers, really. A broker that is bringing deals to the table, and you have a direct lender that can fund those deals, or a certain percentage of those. That's really the goal there.
Yeah.
Yeah.
Through the years, have you heard of any sort of like innovative ideas for the industry to develop that just didn't work? Like, there was a lender who was like, well, let's try this. Let's see if this can bring in some more business, but it ended up just not working.
Yeah. I mean, I have so many people that call me with ideas. I mean, I've had, I want to say probably 1,000 people come up to me with these grand ideas, and I can't even think of one really that, I mean, everyone has a great idea on how to do something, and I rarely have seen anything pan out. Something that makes my eyes gloss over, normally we won't see that product come back. Like, if you have to explain something and it takes more than a minute or two, you really either got to fine tune your messaging, or this just doesn't make sense. So I've seen a lot out there. Yeah.
There's
I've
a
seen a
reason
lot.
why the industry today is so much like it was 20 years ago, right? It's because there's things that work. And maybe prior to 20
Absolutely.
years ago, there were people still trying to figure it out, right? And they made some mistakes, but eventually it landed at a place that just made sense financially and from a risk perspective too. Because at the end of the day, there's risk on all sides, but the lender has the most skin in the game.
Absolutely. Yeah, no, it's so true. And because of the position that I'm in, what I get is I'll get a lot of calls from people that they've already tried to run their deal through their local private lenders, which is what I recommend. So if a real estate investor's out there, go to your local private lending, the guys that are funding deals there locally in your local market, talk to them because they know that market better than anyone else. All right. Run it through them, run it through the big nationwide lenders, run it through whoever you can. But normally, sometimes I get those guys they've already done all that. And they think, well, you've got all these connections in the industry. Certainly you can fund my swampland deal in Mississippi with all these issues on the property. And I was like, no, no one's going to touch that deal. And so I get a lot of that. Borrowers need to understand that lenders are very, very cautious in providing money for a loan. Very cautious.
Yeah. About the time that we met, there was some momentum starting in the institutional buying space. These big, like the iBuyers were coming in and they were doing a lot of business. And I don't know if they were getting money at all from, private money lenders or hard money lenders. Maybe they're probably getting most of it from Wall Street. But do you remember how that affected the industry?
You mean like the Zillows of the world and
Yeah, the
such?
Zillows of the world.
Yeah, yeah,
With some
yeah.
of these larger institutional buyers that would, I remember there was a time period when I can't remember the guy's name. He was like the CEO of BlackRock. Was like,
Right.
pretty soon people aren't going to own homes, right? It's going to be these large Wall Street backed buyers that own everything. And there was a momentum there for a long time. And I remember us running numbers, and in any particular state or city at a given point, 30%, 20 to 30% of all the buying was happening from institutional buyers. Now, that's since
Wow.
changed quite a bit since COVID, and the iBuyer model kind of failed. I mean, Zillow, they shut their system down, and a lot of other companies that were doing a lot then just went out of business. Some of them were raising, one company had raised like $1 billion to go
Right.
and buy property, but failed. And so I'm thinking about those scenarios. How did that affect the industry? Do you remember?
Yeah, a little bit. I mean, I just remember the buzz was very strong. It was very heavy when Zillow was out there buying properties like this. They would just run these numbers, there was nobody really behind this computer screen. It was just I think it was just maybe AI generated or something of that nature at the time. And it was just, if it
They were
fit.
using the Zestimate.
Yeah, Zestimates, right? Oh my gosh, that's crazy, right? That's weird. And so, yeah, I mean, those never really panned out from what I understand with Zillow. But I think a lot of the successful guys in our industry, what they would do is just keep their eyes focused on the goal. There really wasn't much you could do. And I don't think it affected us too much. I didn't really see them really buying up the typical distressed types of properties and flipping them as much. I didn't really see all that. I think it was like if you were to think of us in a car race, we're all in a race, and then maybe a mile down the road, you saw another car race happening, and they were flying by, making us look like we're standing still, but it didn't necessarily affect our own race, if you will, if that makes sense. So I think, now institutional capital though did start to flow into our industry, and that's where you start to see some of these larger companies being able to scale up. And now they have more money than they know what to do with it. And so they're looking for deal flow. Whereas years ago, I remember the whole thing was like, I need more money because I have so much deals coming in. Right. I remember, I mean, that was like,
it was a supply and demand issue.
Totally.
So where do lenders go then to get more deal flow? Do they just change their products and move from like less gap funding and fix and flip loans to DSCR loans? Because that was a big shift that I saw. Like 8 years ago, it was all fix and flip loans, and you didn't hear much about rental type loans. Then DSCR got really popular. Is that where the shift has been to create more of the deal flow?
I believe that's a big part of it. Yeah. So if your main product is you're doing your 12-month bridge loans, your fix and flip rehab loans, and that's what you do, and that's a great product, and you've niched that out, and that's fantastic, because I believe that's where real success happens, is when you niche a product out. But you do have to pivot a little bit. So if you see that your deal flow is starting to dry out, maybe you should pivot to the long-term rental loans that are out there, those DSCR loans. Maybe you should pivot to ground-up construction or some other thing out there. Maybe you're interested in doing seconds or gap funding or whatever it is. You need to find out where that flow is going and kind of capture that a little bit. In addition to that, where to find the deal flow. I mean, obviously, I'm going to say come to conferences like ours, especially conferences that are marketing to other brokers that are originating loans that can bring deals to the table. And so now you can meet a countless amount of brokers that have deal flow already, and they're looking for lenders that they can work with and they trust and they like. That's one way. And another way too is just to get better with your marketing. Get better on social media. Most lenders in our industry they're not that good at social media, or they're just not prioritizing it enough to make it a big deal. And social media is a big deal. Email marketing is a big deal. All these things are really important. And I think we're missing a large part of our growth because we're just kind of like putting that off to the side.
Yeah.
You know?
Well, part of it has to do with what we were talking about earlier, which is this good old boy network and sort of the old cats just doing things the old fashioned way. Right.
Yeah.
They still want to do business based off of a handshake. But in this digital world where social media is so popular, that's where people are hanging out nowadays. And their new customers are on social media.
Yeah.
Right? And maybe they're not at the conferences because people are afraid to go and shake hands now. Like everything is done on Facebook and Instagram and TikTok, and they don't know how to go shake someone's hand and talk to them face to face because they've never taught.
Yeah. Yep. That's so true. I had a little bit of a great story. At our last conference, we had a number of younger people at our event, and my wife mentioned a gentleman that was a little bit hesitant. And this is our cocktail party, so it's just kind of painting the picture. The night before our conference, we have a big cocktail party by the pool, beautiful setting, a lot of people there, music and the whole bit. And there's some people that are a little hesitant in going in and striking up a conversation or introducing themselves to other people. And my wife told me a story. She saw a young man just kind of like looking and not really engaging. So she gave him some encouragement, saying, look, this isn't a very engaging crowd. This is a crowd that you can get around, and you can, they're all friendly. No one's going to there's no cliques at our conference. And she encouraged him to get out there and get it and just introduce yourself. Right now, there's nothing fancy about it. Is just reaching your hand out and introducing yourselves, and not just pitching your product, but actually listening to other people. At any rate, we saw some of those people that were a little bit hesitant and shy. And like you said, they're stuck on their phone all day long. They don't know how to go out and network. But it was great to see some of these young guys come back with some huge success from it.
Yeah.
And not only did they get great lead flow, but they starting to believe that I can do this. I don't have to just be stuck to my phone. I can actually meet people like this and interact and exchange business cards.
Yeah, real estate in general is one of those industries where there's still a lot of interpersonal communication that needs to happen for deals to get done. It's different than most industries, I believe. And I don't know why that is. Maybe because we got a tangible product, right? At the end of the day, there's a house, right? Or there's a building, and it kind of all starts there. And
absolutely.
then, the handshakes happen and the relationships happen. There's this movement in the space to automate everything, right? You want AI and automation, and there's been talks for years about trying to get rid of real estate agents, right? And doing everything online and through an app. There's pros and cons of that. Like real estate in general is always slow to adapt to technology because of this physical product that we're trying to leverage. But I think it's going to be also a pro in the long term that doesn't move too quickly to AI and too much to automation too quickly because of the old cats, kind of holding it back. And there's still a lot to be said for looking somebody in the face and meeting them and trusting them and then wanting to do business with them.
Absolutely. Absolutely. Couldn't say it. You said it perfectly. And it's, the way I look at it is if you can combine this isn't what I made up. I heard this somewhere, but if you can combine high tech, and let's say high tech means social media, right? And I meet somebody on social media and say, hey, you're going to be at the event or whatever. I look forward to meeting with you. And you connect with them on social media, on Instagram or LinkedIn or wherever. If you can combine high tech with high touch, then you have won the game in networking, right? If you're out there, people see you, they they're hearing your message on social media, and then all of a sudden you see them at a networking event, your impact is so much greater than just meeting somebody for the first time. So combining those two is, in my opinion, the best formula for success. I mean, of course, you have all kinds of strategies. You can do podcasting and gosh, the email marketing and sales funnels, and it's endless, but just get out there and just start creating content.
Yeah.
And then they'll start to see you on social media because that's where they're hanging out. But then when they see you in person, it's a whole nother world of opportunity.
Yeah, I think you're right about that. For our lenders that are listening, there's so many ways that you can compete in this business. But at the end of the day, it almost sometimes always ends at rate. How does a lender best compete without a race to the bottom, where you're always competing on rates?
Sure. Yeah, a lot of that has to do with understanding the deal intimately and learning how to color outside of the box as a lender. If you're a direct lender, you have decisions you can make that are much quicker than a lender that is being, that's basically using other people's money, but those people are dictating your underwriting guidelines, right? But if it's like, hey, this is my own money, I'll do whatever the heck I want to do with it. You can make those decisions on maybe dropping a percentage point or providing a better solution to the problem that your borrower is actually facing. So understanding the borrower's problem and why that's an issue and addressing that is going to be better than just racing to the bottom. Oh, well, what are they offering? Oh, they're at 12% and 2 points. Oh, I can do 11% and 1 point. How about that?
Right.
Is that really the problem? That's a little bit of a surfacey Band-Aid, but let's really figure out, unpack that deal and figure out what's the issue here that we can solve, right? And I think that's where lenders can win. Yeah, they want to know, people want to know you, like you, and trust you. That's really key. But to learn how to get creative on a deal is going to be important.
Yeah, I think that personal connection is so valuable. That loan officer who really understands the business of their investors, understands the market, understands the speed that needs to be taken on deals, right? Sometimes you got to get a loan done quickly. And I've heard lenders use that as a value proposition, right? They got percent of LTV they use. They got those kind of the standard things, but then they have these other things like, we'll close a deal in a certain number of days, right? Because sometimes
right.
They're working with distressed sellers that are in foreclosure or have a situation where they need to close quickly. Like that's a good value prop. For a new lender who's starting, and number one, they should go to your conference, right? To learn and educate and start to get into that ecosystem. But what are some other things that a newer lender can do to get going and not hit the typical pitfalls that they would hit if they weren't paying attention?
Yeah, well, a couple of things. Number one is I highly suggest, if you're ready. So it depends what level, where you're at as far as like your experience level, right? And how much money you have. And there's a lot of variables that we can talk about. Couple options for people to explore is, number one, to create a real estate fund. And I highly encourage people that if they're ready to create a real estate fund, we have the team set up to help them do that. We have Dennis Doss, who's one of the leading real estate attorneys in the country that's been doing private lending for over 40 years. His passion is to help people start and scale and grow a real estate fund. And he does all the legal side of the thing, of the whole business aspect. And I've done a podcast with him, and he really discusses the ins and outs of that. So we had a 90-minute masterclass on how to do this at the conference. And alongside of him was Matt Burke, who is the CEO, of Veravest. And, they do loan servicing. He just talking about how to raise capital. And we did so much. And then we had an actual fund manager talking about the opportunity that, from his perspective, how he has grown his business. And creating a real estate fund will give you the options to make quicker decisions on funding a deal or not. It also provides a lot more income for you because you're going to be earning the spread. So let's say you have now raised capital from these accredited investors, and now you've raised $1 million, right? And you have told them that in the documents that you have created with the company and your offering documents, you're offering them an 8% return on investment. Now you turn around and you loan that money out at 12%, 13%. And points and fees, management fees, and all these fees that add up. As a fund manager, you can make a significant amount of money, and you can make quicker decisions than a typical broker.
Right.
Dennis Dosh really goes into that on our podcast, and I'll give you the link to that show because I think it's really important. And then the other thing too is like you can become a glorified broker. Start brokering loans, originating loans from investors in your local market that are looking for financing. Take that loan. It's as simple as this. Take that loan and go to one of the bigger players that we work with, like a Temple View or maybe like a Anchor Loans if it's a ground up construction. Take it to one of those guys. Ask them to help you in this process. And I think if it's as simple as that, it really is. And some of the top account executives and some of the top people at those companies can really help you start and form this brokering model, this relationship. And then eventually what you can end up doing with that company, if you start bringing them more deal flow, is a white label type of a situation where all of a sudden your company, call it ABC Lending, is now looked as the primary lender in the deal, and they're working, you're a correspondent, and all of a sudden you can create a program where it's almost like a line of credit with this company that you've developed relationships with. So you can do that with Temple View, you can do that with a number of other companies. So
I can see that being
white
really
label
valuable.
correspondent lending. I'm sorry.
I can see that being really valuable too when you're working locally, and someone could make some big moves by going to all the RIAs, the local meetups, and networking with these fix and flippers and landlords who are borrowing money, and they don't necessarily want to go to the big guy who has this big, huge social media presence. They want to do business with someone they met face to face. And so that would be a good place for a lender to start off, is like going to local meetups and just meeting everyone.
Absolutely. Oh yeah, no. If you're a local lender, that's exactly what you should start doing. Yeah, just make yourself known, and people will flock to you. It's like, bugs to a light. They will want to get to know you if they know you have money to fund a deal. Absolutely.
Yeah, everyone needs cash.
Yep.
And that's one of the things that we were talking about earlier, is that institutional cash was coming in, but there's still something to be said for the handshake. And that's what your conference is all about, is meeting people in person. And you're really built a reputation in your career being that connector and bringing people together. Is there one relationship that just resonates for you where you're like, and that's like probably the best connection I've ever made? It was somebody who was just starting, or some big company or two big companies. Is that something you can share?
Yeah, no, there's a number of them. Most recently with the American Lending Conference, I think it's my relationship with Doss Law that's been the most fruitful in that. And the reason I like my relationship with Doss is because I never had, for 16 years, we knew each other from afar in a way. We really didn't work together. I think maybe one of their employees went to our conference, something like that. But I didn't really have a relationship with them. I always wanted to. And when he heard that my main focus of the conference was education, Dennis was like, that's what his main focus as well. That's his passion. That's what his mission is in this stage of his business, is to teach other people and educate others on the market, on the industry, on creating a real estate fund, and all these things that he teaches on. And so our values have lined up really well. So it's good to see. You typically see sponsors and other attendees, like, what can I get from your conference? They count how much deals that the ROI, it's pure numbers. And I get it, because that's how I am also. Like, I'm a numbers guy, but it's really refreshing to have a partnership with a company that thinks long-term, thinks more education, more true, real value that you can provide someone. And I've also seen, apart from that, I've seen companies that, without naming names, if you don't mind, I remember sitting down with a gentleman here locally at Starbucks, and I said, why don't you just, this was Pitbull days, why don't you just consider coming into the hard money industry? This was 2018. There was no private lending for vernacular. So I said, look, you've been a borrower for so many years. You understand that side of the business. Why don't you just take a look? Come to our conference. If you find something there that interests you, I personally think you'd be a great lender. And so he's like, okay. So he comes to the conference. Long story short, he becomes one of the top private lenders here locally, but also very well established on a national level as well. And the partnerships that he created with other capital providers has been really, really amazing to see what they've been able to do.
That must make it all worth it.
There's so many of those types of stories,
Yeah. I mean, that's
Yeah.
the thing at the end of the day, like there has to be something that drives you personally to keep doing this because you've been doing it for almost 2 decades.
Yeah.
You have to have some passion around it. And I can tell that you really are a connector. Like it's in you, right?
Yeah.
It's
Right.
something that makes you happy to know that you're putting together two people or two organizations and they can, make some money together. That's really what I admire about you and how you run your business. And I would encourage anybody who's thinking about this space to check out the American Lending Conference. When is the next one?
Yeah, the next one is September 3rd and 4th in Las Vegas at the Green Valley Ranch. Now, Green Valley has turned into our home, if you will, and that's our hub. And so our first conference was in Fort Lauderdale, which we loved. And then I wanted to hit up the West Coast more. And so found this partnership with Green Valley Ranch, and it's a gorgeous property. It's not on the strip. So it's not like your typical casino on the strip. It's about 15 minutes outside of the strip. It's a beautiful open air type of a resort place, a beautiful pool. Bring your family. It's really nice. But anyway, September 3rd and 4th in Las Vegas at the Green Valley Ranch. Yeah.
Is registration already open for that or is that coming soon?
Registration is open. And what I'd like to offer anybody who's listening to this is an early registration code. Now, we are raising the prices on our conference. And so we have an early, it's called, the code is early bird. It's going to give you a $500 off of our gold package. And you can go online. I'm not going to do the whole pitch on what gold means, but it's like we basically roll out the red carpet for you. We do marketing for you. We do all kinds of stuff for you, but it's $500 off of that. So I'll give you the code for that. But it's called early bird. So you go online, register for gold, put in early bird. You're going to get $500 off. So I'll provide that for you, for all of the listeners on this show. Now, I can't keep this going for very long, so I'll probably have to put a cutoff date on this. But as of right now, I would just register early bird because not only that, but the prices are going to go up. We have to just cover our costs.
Yeah, that makes perfect sense. We'll put a link in the show notes for everybody who's listening. They can go there and they can get, what's the URL? Do you remember?
Yeah, just AmericanLendingConference.com and just go to register and you'll see the 3 levels and choose gold because that then will get you the $500 off. So gold is $1,095. So it ended up being $595 for everybody for
Very
now.
cool.
Yep.
Well, thank you for doing that. I appreciate it. So you guys go check that out. You get to meet Matt in person. Really, really amazing man that I've admired for many years now. So I appreciate you coming on, Matt. Thank you so much.
Yeah, thanks, Benson.
For taking the
and
time.
also, without a doubt. And also check out our podcast too, The Lender's Playbook. That's another thing that I love to do because I'm connecting people as well and helping them tell their story. So check out The Lender's Playbook and get to know our sponsors and guests and everything and what they offer for sure.
Amazing. You guys check that out. We'll put all those links in the show notes here so you have easy access to it. But Matt, thanks for taking the time. Really appreciate it. Good luck with everything coming up here soon.
Thank you, Benson. I
Yeah,
appreciate it. Thanks for having me on your show. You keep doing the good work that you're doing. You guys are awesome. Appreciate you.
Well, we always will. Thanks again for being here. And everybody, thanks for listening. Appreciate you listening to this edition of the REI Hacker Podcast. Keep an eye out for more amazing guests like Matt Rosen in the near future, where we talk about business and entrepreneurship and real estate investing and just talking about all the inspiring stories that we can use in our own businesses to help us level up and make some money. So thanks for listening, and we'll see you guys next time. Take care.
Thank you.